Welcome everyone to the second session of day 2 of CBI's Global Annual Conference. I have to say it follows off of an incredible session that we just had with the AIIB and Amundi in the launch of their Climate Change Investment Framework. We are very, very thrilled to see that coming on live. I hope you had a chance to listen in. Naturally, that now allows us to turn our attention to Southeast Asia. First off, my name is Justine Leigh-Bell. I'm the Deputy CEO of Climate Bonds Initiative, and a few logistics before we dive in. We have 5 translations currently running to give access to our audience: Japanese, Chinese, Spanish, Portuguese, and Russian. So please do use that service should you need to. I also want to say a quick thank you, a huge thank you actually, to our sponsors, who without them, we would not be able to do this today or any time. Their support is always so greatly appreciated. So what I'd like to do, we have a short session. We have amazing, amazing speakers with us today to give us highlights into what has been developing in the ASEAN region, particularly the role, the leading role that regulators are taking. So we'll hear from them, and also the recently established Sustainable Finance Institute Asia. Joining me today is a very, very close partner to CBI, and a man that has been championing and driving forward the sustainable finance agenda in the ASEAN. Eugene Wong, who is CEO of the newly established Sustainable Finance Institute Asia, who is also former chair of deputies of the ASEAN Capital Markets Forum. He will be chairing our session today. So Eugene, I hand it over to you.
Thank you very much, Justine. That's a very kind introduction. The real champions are actually with me today, and I'd like to introduce them. The first is Zainal Izlan, who's actually Deputy Chief Executive of the Malaysian Securities Commission. Khun Sirivipa, who is Deputy Secretary General of the SEC Thailand, and P-Gillian Tan, who's Executive Director of MAS in Singapore. So thank you very much to the 3 of you for joining us today. So I won't go into the bios because the bios are already on the app, and I think you will be able to see what a distinguished group of speakers we have today from there. I just want to jump straight into the topic, which is sustainable finance in ASEAN. So the advent of COVID-19 has actually made everyone realize how important sustainability and therefore sustainable finance is. But, you know, I was talking to a whole group of capital market stakeholders in ASEAN for the last 2 weeks. And the common thread from all of them is actually sustainability and sustainable finance. So that's how important it's become. But the ASEAN capital market regulators actually have been looking at this and working on it for a very long time, way, way, way before COVID, because they've recognized the importance of sustainable finance. In fact, at the end of 2017, the ACMF, which is the ASEAN Capital Markets Forum, Justine mentioned it just now, a forum that comprises all the 10 ASEAN capital market regulators, and of which the speakers today are all members of, released its ASEAN Green Bond Standards. And in 2018, it released the ASEAN Sustainability Bond Standards and the ASEAN Social Bond Standards. The traction on these standards has been very, very amazing, I must say. And today, bonds that are either labeled or aligned to the ASEAN Green Bond Standards have reached $6.3 billion US, and bonds aligned to the ASEAN Social Bond Standards and ASEAN Sustainability Bond Standards in aggregate have reached $2.4 billion. In March this year, the ASEAN Capital Markets Forum released and published its roadmap for ASEAN Sustainable Capital Markets, which is actually an amazing endeavor because it covers 4 areas. The first is to strengthen foundations. The second is actually to catalyze products and provide access, more access for the underserved markets. The third is to create awareness and capacity building. And the fourth is actually to increase regional connectivity in sustainable finance. So I think this is a very powerful initiative. So all these are very exciting developments that have happened. And what I'd like to do now in the very short time we have is to get the speakers to share with us a bit more about what they've been doing. Now, the 3 things that come to my mind, and I'm sure it's going to be on the mind of the audience as well, is what is your institution's philosophy on sustainable finance? The second is, what are some of the things that you have been doing to drive the sustainable finance agenda in your country? And the third is, how does all this fit with the ACMF plans? So I'd like to start the lazy way. I will go by alphabetical order. And with that, if I can invite Zainal Izlan first to share the SC's views. Over to you, Izlan.
Okay, thank you very much, Eugene. Also like to first thank the Climate Bonds Initiative for inviting Securities Commission Malaysia to participate in this panel session and be part of this global conference. Thank you. It is indeed a pleasure for us to share some of our experiences in developing the sustainable finance ecosystem in Malaysia, particularly in the capital market. Thank you, Eugene, for the context setting. But if I just could also add a bit, just to sort of prepare some of the remarks that I will be making, and I would like to just highlight that in some of the statistics that we've seen in building climate resilient infrastructures and supporting sustainable growth in Southeast Asian region. Between 2016 and 2030, it is estimated that investment of about $3 trillion is required. And in the Malaysian context, as we are signatory to the Paris Agreement on climate change, as well as party to the Sustainable Development Goals, Malaysia will require developmental spending of about 45 billion ringgit, which is roughly about 8 billion pounds from 2021 to 2025 for Malaysia to achieve these commitments. For the Malaysian capital market, I think while we have sort of embarked on the sustainable responsible investment agenda for quite a number of years now, the global goals and also the national commitments actually provide additional impetus for us to pursue this SRI agenda much further. In this regard, with Malaysia's global Islamic finance credential, as well as the similarities between the underlying principles of sustainable finance and Islamic finance, Malaysia is leveraging on this position where it has established a very strong ecosystem for Islamic finance to advance the SRI agenda as well. And in this regard, one of the early, I suppose, achievements was the issuance of the first global SRI sukuk, or rather green sukuk, to be more specific, in 2017, which was a corporate issuance to finance a renewable energy project. And SC, Securities Commission Malaysia, also recognized the opportunities presented by these overlapping principles between sustainable finance and Islamic finance. And the Islamic Fund and Wealth Management Blueprint, which was launched in 2017 by the SC, one of the three strategic thrusts of the blueprint is to establish Malaysia as a regional center for Sharia-compliant, sustainable and responsible investments. So with that sort of background, I think to further embark on some of the initiatives and approach that Malaysia has undertaken, and SC in particular for the capital markets, if I can share just a few, some of the highlights here. And given the SC's dual mandate in regulating as well as developing the Malaysian capital market, the commitment towards creating a facilitative ecosystem for SRI is very strong. We ensure that there is holistic development of the SRI ecosystem. And in this regard, the philosophy or the underlying philosophy that we have undertaken to develop the Malaysian capital market for SRI ecosystem is by adopting a 5I strategy back in 2014. The 5 I's represent instruments, investors, issuers, internal governance culture, and information architecture. And I will go into some of this very briefly shortly. And further to this, more recently, as in towards the end of last year, the SC also launched its Sustainable and Responsible Investment Roadmap for the Malaysian capital market, or our SRI roadmap. This 5-year document identifies 20 strategic recommendations, which are mapped against the 5I strategy, with the intention of positioning Malaysia as a regional SRI center, as well as enhancing the role of the capital market to complement the national priorities in achieving the global agendas. So the 5Is, right? The first is in terms of widening the range of SRI instruments. I will not go into all the 20 recommendations, but just to highlight a few for each of the 5 Is. In terms of the instruments, among the recommendations is to promote alignment to international standards and principles, as well as developing SRI taxonomy for the capital market. In this regard, one of the first initiatives that was undertaken under this roadmap recommendation was a revision of the SC's SRI Sukuk framework, or Islamic bonds framework, in 2019 for financing of eligible green, social and sustainability projects. This is undertaken to promote greater alignment to international standards and therefore making the framework more relevant, particularly to international investors. There are also incentives provided in order to broaden and enhance the attractiveness of instruments. For example, for the SRI Sukuk, where there's incentive in terms of a grant scheme, which can be used by issuers to offset the cost of external reviews in undertaking the issuances. So that would be, and at the same time, there will be incentives in tax exemption or tax deductibility on expenses incurred in the issuances of such sukuk, which have been granted by the authorities. And the equity space, there's also ESG inclusion criteria that is undertaken, which has resulted in companies being included in the FTSE4Good Bursa Malaysia Index. And this can be the foundation for some products, for example, ETFs and other equity-based products in the future. The second I is actually increasing SRI investor base. In this regard, the SC has introduced guidelines on SRI funds to attract more investors into the space. And we've seen a number of unit trust funds which are targeted for retail investors and also wholesale funds for sophisticated investors. And I also have a strong issuer base that we have identified to building a strong SRI issuer base, instilling strong internal governance culture, as well as designing information architecture in this SRI ecosystem. In addition to that, we also look at capacity building, where we in order to raise awareness and also to deepen market participants' knowledge base, Capital Markets Malaysia, which is an affiliate of the Securities Commission, was tasked with promoting Malaysian capital market, have jointly established 2 SRI Centers of Excellence this year. One is in partnership with the Global Compact to establish the Global Compact Network Malaysia Center of Excellence, and second, partnership with the Malaysian intermediaries, financial intermediaries, to establish the Malaysian Sustainable Finance Initiative, or MSFI. And if I could also just highlight one initiative that we have jointly established with our central bank, which is the Joint Committee on Climate Change, or JC3 for short. This has been established last year, 2019, co-chaired by both the SC and the central bank, or Bank Negara, with participation from the capital market, banking, and the insurance industry. And it's aimed at identifying coordinated solutions to address issues in building climate resilience within the Malaysian financial sector. This includes managing exposures to climate risk and also facilitating businesses to transition towards sustainable practices. The work of the JC3 is being undertaken by 4 subcommittees, which look at the risk management, a subcommittee, the first subcommittee. The second subcommittee looks at governance and disclosure. The third subcommittee looks at product and innovation, and the fourth looks at engagement and capacity building. And the work is currently ongoing with some initial sort of wins. For example, under subcommittee 4, there's been a webinar organized in June to build greater appreciation and understanding of climate change among both the public and private sectors in Malaysia. Also, I guess, to complement what Eugene has said earlier, and the work that has been undertaken by ASEAN under the ACMF, I think we are also looking at how Malaysia's initiatives complement and feed into the recommendations under the ACMF roadmap. And as Eugene has mentioned, the 4 areas that make up the ACMF roadmap, you can, if you're able to look at the details of the Malaysian SRI roadmap, you can map them across very, very conveniently, and to see that a lot of the work or initiatives that we have under the Malaysian SRI roadmap complements and mutually reinforce the ACMF roadmap under the 5-year plans. I'm conscious of time, Eugene, so perhaps I could stop here and hand this back to you. Thank you, Eugene.
Thank you very much, Izlan. Very comprehensive and very exciting things happening in Malaysia as well. Gillian, if I could just move on to you.
Sure. Thanks very much, Eugene. And a big thank you to Justine and the CBI team for giving me this opportunity to share some of our thinking on sustainability and the MES's approach to sustainable and green finance. Sustainability is a key priority for us, and COVID-19 has just reinforced this very pressing need to move from awareness to action and towards rebuilding better. It has been very clear from my interactions with financial sector players that the industry recognizes the urgency to forge ahead on sustainability. And despite COVID-19, activity has been very firm, even in the first half of the year. I thought it would be interesting if I could cover a few examples in this space. In Singapore, we saw several firsts in green and sustainable instruments during this period, the first half of the year, which reflects, I think, great depth and diversity in corporates seeking to deploy financing towards green and sustainable outcomes. One example is the National University of Singapore, and they became the first university in Asia to issue a green bond for financing green projects. And these include their green buildings, renewable energy and energy efficiency projects, as well as sustainable water and wastewater management. Capital Land is another example. This is one of Asia's largest real estate groups, and they secured a 4-year, $500 million sustainability-linked loan, representing our real estate sector's largest SL loan to date. And the loan is actually tied to Capital Land's achievements in the Global Real Estate Sustainability Benchmark, or GRESB, which is an ESG benchmark for real estate and infrastructure investments across the world. During this period, despite everyone being at home or working in different circumstances, MES also received over 250 submissions from more than 200 fintechs hailing from 50 different countries to address about 100 problem statements for the 2020 Singapore FinTech Festival Accelerator. And these problem statements were actually centered on 2 key themes this year. One was COVID-19, and the second was green finance. And at this point, you might be thinking, why are you pairing green finance and FinTech? Well, given the considerable progress that Asia has made in FinTech, we think and we believe that if we apply the power and the potential of FinTech to sustainability, our ability to scale green finance solutions will be vastly enhanced. In fact, we are already seeing promising use cases, including the use of FinTech solutions to measure climate risks, to process large data sets, and even to verify the sustainability of supply chains. It has been really heartening to see these developments in such a short period of time. As some of you may know, MES actually released our Green Finance Action Plan in November last year. And the plan outlines 3 key areas of focus. The first is building resilience. The second is developing green markets and solutions. And finally, leveraging technology to ensure improved integrity, transparency, and efficiency of green finance decision-making. We've made fairly good progress, including on some of the green fintech initiatives that I mentioned earlier. Let me just briefly sketch some of the progress and some of the ideas that we have arising from this. We recently closed our consultation on our proposed environmental risk management guidelines. And this covers the banking, insurance, and asset management sectors. And the guidelines were very importantly co-created with industry players. Now, these guidelines, which we plan to finalize in the fourth quarter of the year, set out MES's supervisory expectations for financial institutions in their governance, risk management, and disclosure of environmental risk. Now, these guidelines are a very important step as we seek to strengthen the financial sector's role in supporting the transition to an environmentally sustainable economy, both in Singapore and the broader region. As we all are aware, green finance also goes beyond risk management. It offers a huge unparalleled growth opportunity that ASEAN can tap into. We've heard some of the statistics from Eugene and Izlan already. If I can just cite another, cumulative green bonds and loans issuance in ASEAN stood at $13.4 billion at the end of 2019. And the tremendous growth potential in this space is demonstrated by the near doubling of ASEAN issuance in 2019 as compared to just a year earlier. MES, on our part, will continue to support corporates in the region in integrating sustainability considerations in their financing decisions. Among other things, we do this by defraying the expenses incurred for external reviews, just like SC Malaysia, for green, social, and sustainability-linked instruments, such as bonds and also loans. Our Sustainable Bond Grant Scheme was launched back in 2017, and the MES will also introduce a green and sustainability-linked loans grant scheme in the next few months. Beyond green and sustainability-linked loans and bonds, there will be other opportunities for ASEAN in this space, such as green trade financing, sustainable infrastructure, and so on. Now, to grow the green market, as I've mentioned earlier, there are certain underlying capabilities and enablers that we will need to put in place in order to support financial institutions and corporates in green finance adoption. And this must be a key priority, I think, for all of us, and it certainly is a key priority for Singapore and the MAS. We are growing an ecosystem of think tanks, research clusters, and green finance centers of excellence in Singapore. And this will fill a very keen market gap of rigorous Asia-focused green finance research and training capabilities. Organizations like the Sustainable Finance Institute of Asia, which we will talk about later, are key partners in such endeavors. And we very much welcome their contributions and collaborations with our growing ecosystem in Singapore. And this includes the first Green Finance Center of Excellence in Singapore, which we will be announcing in the fourth quarter as well. Now, I've spoken thus far about the MAS's thoughts on green and sustainable finance. However, a very important point, I think, is that regulatory efforts alone are not sufficient. Collaboration from industry partners and innovative fintechs will also be key to driving the green agenda forward. And beyond national efforts, we will need collective leadership and coordination globally. Singapore actively contributes to these global efforts through our participation in international forums such as the Network for Greening the Financial System, or NGFS, as well as the International Platform on Sustainable Finance, as well as through regional platforms in ASEAN. Now, given this panel's focus on Southeast Asia, let me just share 3 areas where I think the region should work together closely on. And these 3 areas are standards and taxonomies, capacity building, and finally, fintech and innovation. First, standards and taxonomies. Now, one of the things I love most about Southeast Asia is how we are a melting pot of cultures and languages, right? I mean, English, Bahasa Indonesia, Bahasa Malaysia, Mandarin, Thai, and so on. And part of what makes, I think, our region special is this diversity and these many languages. But we must speak one common sustainability language. And sharing a common sustainability language with common definitions for the ASEAN region will increase the clarity and the integrity of sustainable financing solutions that come out from these regions, and correspondingly help make green and sustainable assets and projects in ASEAN more investable. Now, the ASEAN Capital Markets Forum, or ACMF, was an early mover in this space. We've heard from Eugene on some of the standards that they've rolled out, and that has been remarkable progress. But looking ahead, I think there is scope for the region to band together, to look at issuing standards perhaps for a broader range of financing instruments, such as green and SL loans, and maybe even transition bonds and so on. And I also feel that we can go beyond standards. In the longer term, the development of an ASEAN taxonomy would be important in catering to the region's needs as we strive to achieve sustainable growth.
Yeah. Thanks, Gillian. Sorry, Gillian, we have to move on to Sirivipa because we may need to hard stop at 6:15.
Oh, okay.
Yeah.
So let me just sum up. I think capacity building is another key area, and also green fintech, as I mentioned above. And just in summing up, if I may, Eugene, I think the worst thing that we can do, even as we work on our national efforts, is to work in silos and not come together and collaborate. I think if we just collaborate on forums like this and in other forums, we can do very well. Thank you.
Great. Thank you, Gillian. Khun Sirivipa, over to you.
Okay, thank you. So I would like to start with thank you, Justine, the CBI, and also yourself to give me the opportunity to share the Thai experience on this issue. Like the other country, for SEC Thailand, the sustainable issue has been our top priority. Since we believe that the economy will achieve the sustainable growth and long-term value creation when the business embeds the SEC issue alongside all their value chain. We realize that the outcome of sustainable finance cannot be achieved by SEC alone, but need a strong collaborative work. Thus, we have established what we call the Sustainable Finance Committee, comprising of representatives from various organizations, including the exchange, the government agencies, the financial regulator, and also the industry association. Together, we have laid out a roadmap on developing the ecosystem for sustainable finance, which are, firstly, the issuers. Thanks to the great efforts by many of our stakeholders, some of our large listed companies' sustainability practices now have progressed remarkably and are recognized at the international level. At present, 20 set-listed firms have been selected into Dow Jones Sustainability Index. But we want to push this forward to other medium-sized and smaller companies. We are working with the experts to create the capacity building program for them to incorporate ESG factors into their business and disclosure. Recently, the SEC have announced new disclosure regulation under One Report project to require all the listed companies to disclose more on ESG issues, such as carbon footprint, human rights practices, and pension fund provided to employees, which combining the annual registration statement and the annual report into one report to reduce the repetition ongoing disclosure for them. This requirement will become mandate for all of them from 2022 onwards. Secondly, what I would like to mention is about the investor and information center. Investor is key driver to voice and use their voting power. The Investment Governance Code, what we call I-Code, was launched in 2017 as investment government principle and guidance for responsible and effective stewardship investment. We will continue communicating and working toward higher commitment from institutional investors and the asset owners. Another initiative will be to encourage the listed company to take ESG-related factors in choosing their provident fund manager. In addition, we will develop a volunteering platform, which would be a center for providing information on sustainable financing security to promote the visibility of the sustainable instruments. As some issuers raise their need for a local reviewer to reduce costs or facilitate the working process, we have been cooperating with the ADB to support technical assistance for the potential local reviewer. Recently, TRIS, the local credit rating agency, has just been approved as the verifier under the CBI standard. For the product, right now, green bonds, social bonds, and sustainability bonds are important financing instruments that can mobilize massive capital funds to sustainable development projects. We have been actively promoting the sector by engaging with potential issuers and underwriters through capacity building to create technical know-how and green bond taxonomy. Also, in order to enhance the growth of the sustainable bond market, SEC has waived the approval and filing fee until May 2021. In addition, SEC has been coordinated with international organizations such as ADB and also the UK Prosperity Fund for technical assistance and support of the cost of the external reviewer. I am delighted that the issuance of this product has been grown rapidly. The total issuance value has grown to $2.6 billion US, including our first sovereign issuance this year. In August this year, we finally have witnessed the first government sustainable bonds, which is also the first of its kind in Asia. The $1 billion US proceeds will be used for the mass transit project and COVID-19 relief package for those affected. The deal was highly successful, with exceptionally strong demand from the investor, with 3 times oversubscription.
Deputy, my sincere apologies. We are now at the time. I do want to say it is absolutely exceptional to see the advancements that Thailand is making, particularly the SEC under your leadership, hearing about the advancements. We're very, very excited about the Thai market. And so we want to say thank you so much for your opening remarks, giving us a background to what is happening. That also goes for you, Gillian, on the central bank, and of course also to you, Izlan, continuing to pioneer ahead in the market. Eugene, a final word from you, please, particularly highlighting the role that Sophia will play in helping to mobilize. 1 minute.
Great. Well, it's great to see what the regulators have done, but I think, regulatory leadership is one thing. It's come on very strongly, but we do see that the other groups have to come together, and there's more coordination that's required because there's a lot to do and very limited resources. So with that, I'm happy to announce that Sophia was born on the 1st of July to try and help drive the sustainable finance agenda. Our inaugural partners, again in alphabetical order, the ADB, CBI, and ECF. And we're very excited to work with CBI as our resource partner. We've signed an MOU that will help us work together to drive sustainable finance efforts in ASEAN, and also for us to be able to explore using some of the experience and the expertise that CBI has had all around the world for ASEAN's benefit. So we need to work together to build an ecosystem for sustainable finance that will actually be mutually reinforcing with the real economy to create a virtuous cycle. And Sophia is looking forward to working with all our stakeholders to do that. Thank you very much.
Thank you, Eugene. Fantastic. Thank you very, very much. Thank you to our amazing speakers and to you, Eugene. Now, everyone, thank you. Take care.
And congratulations to Sophia.
Thank you very much. Yes, very good. Yes. Thank you. Have a nice evening.
Thank you.